Hey everyone, welcome back to this small account challenge where I'm documenting my journey of growing a small account from $500. Today is Tuesday, October 29th, 2024, and this is my 5th trade in this challenge. So let's jump in to today's trade recap. As of today, my account balance is sitting at $6,419.49. That's almost 13 times our starting balance of $500, and we've only made 5 trades to reach this milestone. If you've been following along, you know that every trade is aimed at keeping risk low, and today was no exception. Today's trade was on BKYI. I got an AI scanner alert at 5:54 a.m., which showed BKYI making a massive 127% profit move within just 45 minutes during pre-market. Now, whenever I get a scanner alert like this, my process is simple but thorough. I immediately check for volume, float, recent news, price range, targets, and I analyze any price patterns that could help identify my ideal setup. The key here was in the pre-market high and recognizing strong support levels. BKYI made a pre-market high of $1.55 and then pulled back, which was no surprise after a move that intense. During the pullback, I noticed that it bounced from a $1.25 support level at 6:03 a.m. This $1.25 level was critical because it's a line that our Smart Target tool plots on the chart. It's an awesome resource for efficient trading. So with that $1.25 bounce, I identified it as my stop loss level, which meant that my risk was clearly identified. From here, I just needed to wait for a red to green signal along with a volume boost to confirm the trade setup. At 6:11 a.m., I got my entry signal. But it wasn't the tight entry that I've been aiming for in this challenge. I entered at $1.32 with a stop loss set at $1.25. Instead of my usual 1 to 2 cent risk, this trade was a 7-cent risk trade. Now let me tell you, this was not a smooth ride. The price was choppy with constant movement around the 9, the 20, and the 50 EMAs. Watching this price action was like being on a boat in rough waters, but even with all of this back and forth, the price held above our $1.25 stop loss. So I stuck with the trade, watching to see if it could push higher. Holding the $1.25 support was essential, and I was ready to get out of that trade if price action showed signs of stalling or closing below. And if you remember from last week's trades, sticking to that support level and waiting for volume surges has been the core of my strategy in this small account challenge. Now, remember that pre-market high of $1.55? Well, that was my main caution level. I knew that I needed to see a strong volume push through $1.55, and then it had to hold that level as a new support for the trade to continue moving up. And sure enough, we saw a massive push through that $1.55 level, with price hitting a new high of $1.81. And that's where I started noticing some stalling of price action around 7:16 a.m. this morning. And this was the moment that I should have exited based on my plan. You know, stalling is always a clear sign for me to lock in profits, but this time I didn't follow my plan perfectly. I decided to hold. Price retraced all the way back down to the 50 EMA, and with the opening bell, it was volatile. Fortunately, though, each candle around the opening bell price action, it held that 50 EMA. So I stayed in, waiting for price to retest that new pre-market high of $1.81. And at 7:45 a.m., I saw my opportunity when the price finally hit that $1.81 mark. And that's where I exited the trade, locking in a $1,751.54 profit. And yes, I was definitely nervous, but ultimately I followed my plan by allowing price action to test critical levels, like that pre-market high and the 50 EMA. This is why understanding support and resistance zones is so crucial, especially in a choppy market environment. If price hadn't retested the pre-market high, my backup plan was to exit at the $1.48 support line. That's this white horizontal line right here. And that would have still given me a decent profit of around $570. So even though I pressed my luck just a little, I did have a safety net in place. So what did we learn today? Setup identification, spotting the pre-market high of $1.25 support level and price patterns gave me my clear entry, my stop loss, and my profit target levels, and the importance of low risk entry. By defining a low risk entry near that $1.25 support level, we created a tight trade with manageable risk. It wasn't as tight as I have been trading. I could have done better there, but the risk was still manageable. Volume surges and red to green signals. Waiting for volume and confirmation made it possible to take advantage of the setup when the stock pushed through resistance. The trailing strategy, holding the trade based on an EMA support like the 50 EMA and adjusting based on stalling price action are excellent ways to maximize profits. When you're trading on a small account, minimizing risk is key. Every decision in this challenge focuses on controlled risk, and that has been instrumental in growing this small account. If you enjoyed this breakdown, please give this video a thumbs up. And don't forget to hit that subscribe button for more small account trading updates, tips, and strategies. I'd love to hear what you think of today's trade, so drop a comment below. And if you're serious about taking your trading to the next level, consider joining my mentoring program at MomentumStockTraders.com and check the link in the video description for more details. And thanks for hanging out with me today. Happy trading, and I'll see you in the next video.